Hello guys, good evening. From here it's almost midnight. Today is Monday, and normally I don't specifically trade on Mondays. Trading begins on Tuesday. Just like trying to see what gives me a high of the week or the low of the week. It depends. And just want to give you guys a little bit of update concerning the last video uploaded on EURUSD outlook for February, in which we are now entering March. And yeah, so I did also talk about Shiba Inu on the YouTube channel, and I also talk about it on my Facebook page. So currently today I did an analysis right here on the forward time frame, and now we have the outcome right here. Right, so currently on the chart, this is the outcome. We see it trade above, and seeing it's going to for my direction, though not too close, but I expect it to trade high to that place. I think that was a 12 months. Let's delete all of these. Alright, so I showed you guys that my interest was actually right here, trying to buy from this area, in which was the point I actually did buy, and I said I'll be targeting 12-month high right here. The reason is with the confluence of what I'm seeing right here on this range that I call right here, and knowing that I am also inside this range high and this range low, this range high and this range low. And when you like take your regular rectangle 2 or Fibonacci, I just want you guys to kind of like mark out your 50%. Alright, because most of the time that is where the algorithm trades into, and it depends on the structure that it breaks and having another block below that 50%. Okay, so it's just like we're having this one right here, and we see it trade to the 50%, and we have it to retracement. So that is, by the way, the main interest that we're having right here, that I have right here for the reason of why I was buying the Shiba Inu, was because I actually see what it did right here. We hunted previous 12-month low, and if I have to target or hold an asset for a period of a year, that is going to be a long period of time, and it has to do with patience. There will be a fluctuation of price, there will be a little bit of pullback, and if I can be able to deal with that emotionally and psychologically, then yeah, I think I can be able to hold for that period of years. Now looking at this year opened, and what I'm seeing right here is that it's refusing to go below previous 12-month low, and we will still go down to lower time frame to see all of that. Now let me take a little break from here, and we talk about Euro and GBP, because that was the first thing I uploaded on my YouTube channel. Deleting of this. So on the YouTube channel, I explained that we will be going bullish on EURUSD and also GBPUSD, in which I also did look at DXY, and I explained what happened on DXY. So on EURUSD, I had another block right here I have eyes on for it to trade into this week. The algorithm did not actually trade down to this point, and I already do know that this right here is not going to hold the price for a reasons that I'm not seeing this as a structure, and it did not mitigate any of supply that it has to use to start selling. And also from my daily time frame, we're already seeing that this right here has already been balanced, right? And this is a swing high, this is a swing low, and we broke out of it, trade back into it, equilibrium, and then drawn to this high, in which what I see resting on that high is a buy stop. Alright, and all of these weeks that we have right here, they are all areas of buy stops that I'm looking at. So I have this idea that since we're having the liquidity grab right here, then the sell stop will be protected, since we're having a swing high being violated. So on the forward time frame, the recent demand that I had was here. Price did not come to that area, and we see trade higher, in which one they opened, and this is one they did we'll be expecting to see what happens on Tuesday, because I'm expecting a structural break. I know that most of us might be seeing this and confirm this is a structural break, but I think my trading is going to commence on Tuesday. Alright, so once Tuesday trade lower and refuses to go below Monday, so Monday started right here. Alright, so Sunday is below right here. This is Sunday and this is Monday. If we continue to go down to lower time frame, we actually see it right here, Sunday. So right here, this is our opening price on Sunday, started from here. Alright, so Monday traded lower and Monday trades higher, having trading above the opening price, and the opening price starts right here. Alright, so now see trade higher, and if we are looking at these highs and lows, we know that we are dealing inside this high and this low. This is a swing high, this is a swing low. We are inside this range. Alright, this is a range that we are in. Okay, it's just like we have it right here. So we are inside this range high and also inside a range low. Okay, so if it happens to be the price in our consist demand zone, then yeah, I could possibly see what Tuesday does. We want to see it go higher to be drawn to these buy stops. Measuring the highs and low right here with our Fibonacci, we see that price traded above the 50%, right, and it's been consolidating on top of the equilibrium, the 50% right there. There's nothing right here that shows a structural break. Alright, to say that we are going to look for sales. We know that this is a buy stop, this is a sales that we are inside that range, and the directional bias is a bullish directional bias, in which next week we are going to enter the month of March, and we will see how it goes. Now also GBPUSD, we see it but from where I say it has to buy from on my Facebook page, and I also did uploaded it right here, and that was it right here. So if we go down to the lower time frame, this is where I was expecting to buy, and yeah, price tapped into it and then it starts to trade higher. Alright, I posted it on YouTube also. So back to Shiba Inu. Let's go back to Shiba Inu and I'll do my explanation of everything I wanted to explain right here. So back to the 12-month time frame, I was saying that we are dealing we're inside the range of a previous year highs and lows, and then if we keep on going down to lower time frame, and we have to do with the D range also. When it comes to long-term investment, that is where you get to see me looking at 12 months and 6 months and have to deal with that range right there. Now we have 6 months highs and lows. We are actually close to the 6 months high right here, and we have our 6 month low, in which price is refusing to go below that 6 months low. We have already taken liquidity from sell side right here, and we'll be expecting it to go bullish right here. So we have a sell-side liquidity pool resting below these lows, in which that was where they are going to traded into. We still have the buy side liquidity pool resting above this high. This inefficiency of the sell side has been balanced, and we are not seeing any structural break, but what, a liquidity grab. Going over to the monthly time frame, this is it right here. You can actually see how it grabbed and hunt that liquidity. And what is it going to be drawn to? We are drawn into a 12-month high. This is our data range. Alright, we are inside this range, and we have a high printed for us, a low which takes liquidity pools. The low is printed right there, and we have it trade into 50% and traded above that 50%. It trades above the equilibrium, and seeing it trading above equilibrium, that is when I have to expect it to trade higher and to be drawn to that 12-month high. Alright, we are at the middle of the price. We are not going to real premium pricing. Now, looking at the monthly daily range right here, this is a previous month. This is December. This is previous month low. It traded lower first of all, when it opened, it traded higher. So what it did right here was open, trade higher. That's like the accumulation manipulation to the outside. One of the first 2 weeks is responsible to print this high. Either the first week or the second week is responsible to print this high of previous month. Then we trade lower. One of the last 2 weeks prints this low, and it trades backwards to create a close. When we go to the weekly time frame, we see that. Now currently this month of February opened right here, and we get to see it refusing to go below previous month low, right? So we open, we trade lower, and we are now seeing it trading higher. Now going to the weekly time frame, this right here is December high, right? So January, this is January right here. This is the first week of January. This is the second week of January. This is the third week of January. This is the fourth week of January. So the first week was what we have given us the high, and also still the first week gave us the low, right? So the month of February opening and refusing to go lower, that shows me that I have to go bullish. And seeing the price traded above the equilibrium, and when it traded above the equilibrium, we saw an area of demand resting right here. All right, because we are now having this low. Now if you are the type that marks a structure, you will be like, this is lower high, lower low, lower high, and we experience a third low right here. So we did not print any lower low, so there will be no need of me looking for a supply zone right here. And looking at the chart, the way it trades, you know that the way you trade that, you know that there's nothing right here that you could be looking at. Now measuring the range highs and lows, this is it right here, and our equilibrium for this short-term range of internal structure is right here. That is the equilibrium, and price was doing what? Ranging, tapped into the 50%, in which below that 50% we have the order block, and the order block is responsible to push the price above that 50%. So what the algorithm does, what the algorithm did, it traded backwards to the 50% to the equilibrium, which has the order block, and is now wanting to use that as what? An area to push higher. Now refining down to the daily time frame, this is the order block right there, and what gave us a structural break was resting right here. Alright, so we tap and we have been ranging on that demand zone. There is no selling pressure right here. Alright, there's no selling pressure right here. We already see it trade into inefficiency right here. Trade lower, still the 17 did not break a structure. This long time, this higher time frame demand zone was still holding the price. Price tapped into it, still ranging around it. We have inefficiency right here. That was where it traded into. It filled up the inefficiency, right? After that, it needs to find its way out, and that was what it did right here. Alright, so I hope this chart is very clean and clear to you, for you to understand that there was no bearish printing structure right here, right? So that is why it's very important that you are focusing on your higher time frame. So that's what we have right here. So now what I shared on right here was actually again an accumulation, manipulation, and distribution, and that is it right here. We traded into a fair value gap, in which a fair value gap is an area of inefficiency that needs to be balanced. So if it is a sell inefficiency, then it needs to be balanced with a buy order, right? And that's what it did right here. Traded into the fair value gap that has sell inefficiency with it has to trade into that sell inefficiency with the buy orders. It traded that lower, refused to go below this low. It came back. What does it tell you since you refused to go below this low without any without printing area of supply? It tells you that this will soon get violated, right? So that was what we have experienced right here, and it traded backwards again. And when it traded backwards, what did it print? It printed a buy side equity pool, and also did a accumulation right here. If we keep going down to the lower time frame, we can actually see it right here. So we have accumulation, we have a bullish order block right here, which is this candle that we have right here. So the market range right here building up an accumulation phase, right? Then the next thing we happen to see is what? Manipulation. Now, what this seems right here to some people would be like whack off, right? But it's actually, yes, you can call it whack off. I don't know how you guys will get to draw that, but whenever I see something like this, I know it is an accumulation, and it becomes an accumulation when it first trades below the sell side liquidity pool. Take those pending orders right here, which are pending orders of what sell stops. People thinking it has to sell, so it hunts, and also people trying to buy area support. It went right below them, take those orders and use it to push the price higher. And when it pushed the price higher, what was it drawn to? It was also drawn to an area where we have a liquidity. Alright, so it's like take liquidity and be drawn to liquidity. So this makes sense to me, and yeah, I still believe that it needs to go higher because every area of sell side inefficiency has been filled up. So there is no area, there's no point that it could possibly react to sell off. So the idea is me wanting to see it still trade higher to hunt this high. Okay, so then the long term will be that high. So now the idea is me having what? Low I. We have an internal structure. The same thing I explained on my Facebook page. Internal structure. So we'll be painting this red to show you that this is where the market shifted. All right. And let me take this off. All right. Still, also those that use Fibonacci retracement, this could possibly be an OTE for you. Right. Trade into premium 78 Fibonacci level, and it's using that to go bullish. So with time, I hope you guys' eyes could possibly see the things that we see. Okay. So what I'm actually showing you guys here is a structure, and when it shifted. Okay. So while I'm marking out the major highs and lows, which are the external highs and lows. Because I know most of you guys get confused in market structure. Most of you guys could mark this as a structure, mark this as a structure, but that is not the main thing to mark as a structure. All of that are just internal stuff, and is a weak area. Alright, you are to be marking the strong highs and lows, which are the external highs and lows, and you get to find how you get to mark the structures like that on my Udemy course. So you can go purchase the Udemy course, and yeah. So right here, this right here, I am going to label it as a break of market structure, not a break of structure. All right, break of market structure because it's a opposite. It's break of market structure. Market structure, it broke a bearish market structure. That is why it is called. That's why it is called break of market structure. If it is break of structure, BOS, it means that it is a continuation of the trend. Okay. So I'll say it trades into a supply demand zone, supply zone or favorite gap. That's the reason why it did the sell right here, but it failed. All right, so equilibrium price, and expecting it to go bullish. So see you guys later on. Take care and be safe.